Hey, how's it going? Welcome back. It's Jonathan. Now, I know what you're thinking. What the bloody heck is happening with the financial markets right now? Well, as we've seen so far, $2.5 trillion has been wiped from Wall Street. So what's happening is Donald Trump is, and this is by no means a fundamental view, okay, but Donald Trump is putting tariffs on almost every single country around the world in order to strengthen the US economy. The only downside to this is that tariffs don't actually work in the way that Trump thinks they're going to work. They don't actually improve the US economy. In fact, they damage everything around them. Now, we have this little post here, so it's from theguardian.com. There's a few things that we can go through and take a look at what's happening. But global markets have fallen following US tariff announcements. And we can see this is basically around the 6th of March, was around the high came in for Germany. And since then, it has fallen lower. We have, what is another one that we have here? We got Japan has been falling lower since around January. So this is the grey line, falling lower again. We got the blue line, which has been falling lower. I'm going to try and highlight the blue line. Blue line found a top just before March, so probably around the 25th of March. It's been falling lower since, which is actually the US line. And this is actually not good, but also should be expected. So the one thing that I want to talk about today is a few of the cycles that we have playing out. And this is in relation to the end of the 18.6 year cycle, okay? So there's going to come a point where everything comes crashing down. Now, is everything going to come crashing down right now? I still want to go to the side where I say no. And I know that everything around us looks like it's crashing down. Stock markets are falling. So what we have here is we have the US dollar, and we can see the US dollar against a basket of other currencies is also touching, lows that haven't been seen for 6 months now. Okay, so back here we have these lows around here, which are around September to the start of October. But they also have breached prior lows, which occurred in January. So as we can see that the Trump effect, where Trump basically came into the office, or I shouldn't say come into the office, we moved into this election period and the US dollar was rising, has basically popped since the inauguration, okay, and the US dollar market in itself has been falling ever since. So when it comes to the cycles of things, I just want to point out that we're going to get these ebbs and flows, and we're going to get these moves up and moves down in the cycle. And I want to show you a big picture framework which I have been following. I created this back around 2023, and the reason why I created it around 2023 was because that the last cycle that ended was in 2022. So that was basically our 18.6 year mid-cycle. Okay, so I'm going to get a little paint up. Okay, so if we say, for example, 2009, okay, to 2012 is when we would have been expecting the prior cycle to be bottom. I mean, we know that the stock market bottomed around 2009, but if we look at the real estate market, it's kind of bottomed a little bit later. Okay, so this is why we get this little bit of a framework here. And then we have our midpoint, and then we have our end of cycle. So as we're moving into that midpoint, okay, and the markets come up and we get our COVID crash, what you'll notice if you go back to your stock charts is that, yes, the markets did come up again, but then in 2022, and this is by no means to scale right now, so if you just ignore this bottom period, in 2022, okay, so around this period right here, we saw that the markets also came into a long-term bottom, and that was a cyclical low. So had the Federal Reserve, had the US not bailed out the country, had every country around the world basically not bailed out their country and driven the stock markets higher, we would have actually seen a 2020, okay, this is 2020, top, or a 2019 top, depending on the framework that we were watching and when we were getting out of the market, a 2019 to 2020 top, and an actual eventual low in 2022. Okay, that was a cyclical low, and that was a cyclical move. Okay, so that was the whole time period we were watching. Now, if we go back to the stock market, we'll definitely see that, if I can get TradingView back up, okay, we'll definitely see that we have a 2022 low, and that's this point in here, okay? So we basically topped in 21, and then we moved all the way down into an eventual low in 22. So what I was trying to explain is that had this event not happened here, these markets would have actually, or should have been, sustained lower into that eventual 2022 low. That would be a cyclical framework. However, we had to work with the US basically bailing out the country, and also every other country around the world basically being bailed out at the time period. And that was the market action we had to move with. Okay, so these are the kind of things that we got to work with within the cycles, is that we have to move with the period. Okay, and if the period, if our cyclical period is indicating a low between a time period, we have to know what the actual governments are doing, and that's what I'm trying to get to you. Okay, so where we are right now, we can see that this is a very steep drop off in March of 2020. Markets then rallied higher, and if we look at it in context, this is actually still quite a minor drop. Now, if we go back to the Gann theory, where last time I talked to you about this market being in a bear market, which was related to our 12-period Gann theory, I was saying that technically speaking, we're in a bear market right now, which means that we should be expecting bear patterns to be emerging. Okay, so anything bearish right now is normal, but I am still flipping back to that longer term cycle because, what about this period right here? Well, we didn't all say that the market was crashing and everything was going to be doomsday because this happened. If we go back even further, we didn't call doomsday because, well, this was in 2022, but because this happened, for example. If we go back even further, let's just find another period. This is around 2018. We didn't call doomsday or the end of the market cycle, etc., because this was happening. Of course, if you're using other indicators like divergences between, for example, the Dow Jones average and the Dow Jones Transportation Index, you're definitely going to see those end of cycle divergences occur now because we are at the end of the cycle. But it doesn't mean that the divergence to the end of the cycle framework plays out, say, within like a 5-week period. It can take 6 months or so to actually play out. So to save me from waffling, before we come back to the Dow Jones chart, I want to show you some of the longer term cycles and that framework that I put together around 2023 to give you an idea of what I was actually looking at. So I produced this in 2023, and it was a framework that I looked at to move out until 2029. So this was going to be that 2023 to 2029 period. Now this is just a model. It doesn't mean that things are going to actually occur this way, but we had just come out of a 2022 low. Okay, so if I just refresh your mind, we just came out of this period right here. Okay, and then I was looking in 2023 for the markets to basically push higher, push higher, push higher into around 2025. Okay, so this is where we are now. So we pushed higher, pushed higher, pushed higher into 2025. And then 2025 kind of starts off flat. Okay, I'm not saying that this is the model we should be watching or definitely using. This was just a framework of that longer term cycle stuff. And then, but after this sort of flat period or after any of these declines, we do move up into our eventual top. Now, the framework that we have here, which is a hypothetical framework of just what we were expecting to possibly occur, is that the markets were likely to move up and find a top either between 2025 to 2026, okay, and then have their eventual declines. Now, you can see that these sort of declines that are occurring in this panel that I've got my mouse moving around right now are quite, short and sharp. Obviously, over here, this is a little bit longer. This is prolonged over a few months. However, if we go forward, we can see that once we top out, or if we top out in 2026, this market falls and falls and falls and falls and falls, and it's going back down to these 2020 levels or these 2022 levels. And this is obviously just a framework or an idea of market direction. It doesn't give us price. Price can fall much harder, but we can see here we have this prolonged and long-term decline that's possibly on the agenda. Okay. Now, of course, not saying that it is on the agenda. I'm just giving you that hypothetical situation, okay, of what we would be expecting from the 18.6-year cycle as we moved into its eventual top to when the top popped and the market started to decline for that 3 to 4 year period. So let's take a closer look now, and we'll go in and take a look at the January to April period using the mass pressure chart by WD Gann, okay? Now, this is by no means one of the best charts that I have produced. I've actually got a few of the other cycles hidden away right now. However, this is one of the cycles that we would be watching. And basically what it was suggesting to us is that if we have market direction, okay, so we look at for market direction. I know my pencil never works when I want it to. We have market direction moving higher, okay, so this whole period would be higher. So we'd be looking for the first you know, 2.5, okay, this comes out to around March, so 2.5 to 3 months of rising prices, okay? And then after that, we got falling prices. So this is all natural and as to be expected. Now, as you can see, each time that this market makes a high, just like up here, we get a drop off, okay? And then the market moves up and then we break the low, okay? So then we go down, we break the low, we break the low, we're breaking lows all the way down. Then we kind of get a reversal. I'm not saying this reversal is going to come in any day now, okay? That's not what I'm suggesting. But then the market comes down and it breaks again, okay? And then it comes up and then it breaks again. And eventually it finds a low. It doesn't fall down forever. So I guess what I'm trying to get at is, deleting the wrong one is obviously not the best idea. What I'm trying to get at is that there's going to be an eventual low, and the probability of an eventual low is more likely than not. I don't think that we're at the end of the cycle, and from an 18.6 year framework, I think that we have a little bit more to run, okay? Because I'm not saying that this hasn't happened. Now, when we open up, so for those of you who have done the McWhirter program, I'm not going to explain everything to those who haven't here, because it's quite in depth. Let me get rid of this, get rid of all this, pop on the Lunar Node, okay? So basically, long story short, from 15 degrees of Aries all the way out to 15 degrees of Aquarius, okay, so the node moves backwards or clockwise, okay, so everything else moves anti-clockwise, but the node moves clockwise through the zodiac. So from Aries through Pisces into Aquarius, we're on topping pattern alert. Now in the McWhirter program and in the Gann financial timetable program, I give the exact degrees that we should be on alert for when these markets are likely to reverse, and we go back and we test roughly 250 years of data to get this hypothesis. But we're in that period now where we should be open to this market topping out, okay? It would be not unusual for this to occur, okay? This is the 18.6 year framework, which means that we use the North Node of the Moon for that, okay? Because it is an 18.6 year cycle. And I've gone over in the past how we can prove that cycle exists, and I showed you that within Timing Solutions, so I won't refresh that today, but there's a video called Proof That This Cycle Exists, and just go watch that one, okay? So knowing that we're in the end game right now, what is your bias? Is your bias, personally, this is just a personal question for you to consider for yourself, is your bias, you know, are you long-term, you know, next 20 years, bullish property, bullish stocks, bullish cryptocurrency, etc., etc., etc.? Is that, do you reckon that at the end of the cycle, should you be bullish for the next 20 years with a long-term outlook of pouring everything that you have right now, getting high mortgages, you know, pouring everything into the stock market, or should you be playing defensive? Because my whole theorem is that we should be, by the end of this year, out of the stock market, okay? Now, why would we want to be out of the stock market in 2025 or at the end of 2025 and not so much at the peak, you know, the very day to the peak? Basically, we want to protect our psychology, okay? Now, that's very important. We want to be protecting ourselves. We want to be protecting our psychology. Now, when it comes to the end of the cycle, a lot of people start to get greedy, okay? They get greedy, they get fearful of missing out, because that is how the dynamics of the cycle work. So we protect ourselves by that, by removing ourselves from the market. That's the only way we can do it, because we are humans and we're going to fail. So we get out, we sit on the sidelines, and we watch all the suckers around us keep piling in, keep piling in, keep piling in. Right now, there has been no reason to believe that this market is topping out. Okay, we do have a March high, or I should say we do have a January high. We do have a cyclical March high here. But if I scroll this over and over and over, this is going to be broken, and it should be broken, and that would be my first bias. I did say in a prior video that if we broke down, and I know here that I possibly don't have all the data, so the market here is Thursday. At the moment in Australia, it's the 4th, okay, so it's in the morning on the 4th. Yesterday it was the 3rd, okay, so we'll get into that in a minute. But what's happened here is this market has come down, okay, and it's basically coming down into this range here. And my get out, or my change of tune, was definitely around that 40,000, okay, because this is an old level that we had here, which was being touched 2 times prior. Obviously, we don't have much more data than that because, you know, we're moving into all-time highs, etc. But that was kind of like a get out of the market framework, or at least a change from bullish to temporarily bearish framework for me at the moment, but it all comes down into the timing of things, okay? So April is likely to be a month of either some form of bottom, okay? Now, ideally, I would like to see a bottom occur around that mid-month. Now, the good scenario for me, my ideal scenario would have been that we actually move up into a top before making a bottom and then moving up from there. That would have been the ideal situation. And I would have preferred that just because I'm more of a bull than I am a bear, which means I'm always trying to find ways for this market to move higher than lower. So that's my general personal preference. However, if this market does continue to move down and it moves down for a few more days, okay, well, it's definitely, don't look at price, okay, because we're basically at this level right now. But I would then be looking for this low to occur in April, okay. This is a very important low, and I would definitely be looking for that to occur in April. So, off camera, I just did a quick time count. Okay, so I'm going to put some geometric circles on the chart right now. Okay. Now you can go ahead and do these counts yourself if you'd like, but we got a few lows and a few highs coming in at a sequence which are actually coming in at around this point here as well. Okay, so these are all, from a time perspective, these are all coming in at this point too. Okay, so there's reasons to believe that we might get some form of top or bottom around that mid-month time period. Okay, so not the exact date, I'm not looking at the exact date right now, but this mid-month time period, I'd expect some form of top or bottom, and ideally it is going to be a bottom. Okay, so where to next? Well, let's take a look at the current market action, and I want to just explain why I try to never get fearful at these points in time. So we can see this market is moving down, okay? So all the news is coming out in the market, and this is the last time I did this video. Okay, so let's just change it back to daily because that's definitely the wrong chart. This is the last time I did this video right here, 31st of March, okay? After the 31st of March, I said there's a possible reversal. We saw the reversal. The reversal only lasted 2 days, okay? I really don't like how this one draws, but nonetheless. And then we've actually broken into this period right here, and this period here is the 3rd of April, okay? So why is that important, and why should we care that this is the 3rd of April and that it's breaking old lows? Well, I'm going to show you the time counts for April this month, and I'm going to give them to you. Now, I don't do this often. I don't publicly display these. So consider this possibly a once-off, or maybe very few times this year I'll show you these dates. But this is using the sun, and I provide you these dates, and this will all be blurred out except for the Taurus April time period, okay? And these are the dates that I'm going to be watching this month for April. Okay, for markets to move into sensitive degrees using the sun, and these dates here are likely to find these peaks and troughs in the market, okay? So today's date is the 4th, and it's the 4th in Australia, okay? Now tomorrow is, well, today is Friday in Australia, and tomorrow in the US, depending on what time zone it is right now in the US, what time it is in the US, will also be the 4th, and that'll also be Friday. So let me explain the current situation, okay? This is how I'm looking at it, okay? So option number 1 is that we get some form of reversal at market open, okay? And this market pushes higher, okay? Okay, if we look at this date here, I can't keep editing this out, so I'm going to just tell you 3, 7, 14, 19, 24, 28. We're going to focus on 3 and 7, okay? So the first 2 immediate dates that we're watching are the 3rd and the 7th. Now these are actually, let's go ahead and delete this because this is actually important. The 7th is Monday. Oh my golly gosh. The 7th is Monday, okay? And the 3rd is yesterday or today, depending on your time zone. That means that the market is likely to either make a higher or low on one of these 2 days. Now, I hate it. I absolutely hate it when we get these, Thursday, Friday to Monday time periods, because generally speaking, the Friday can move down again, okay? Sorry about the same color for everything. Friday can move down again, and then the Monday can see the reversal, okay? So we might not be out of this just yet, this is kind of what can happen. We should be open to it happening, okay? If anyone knows how to permanently get rid of that, even with your ad blocker turned off, please let me know. All right, so this is scenario number one, and this is if I was likely to be bullish, okay? So scenario number one is that we come down possibly another day or two into this Monday and then reverse from there, okay? And if we're bearish into the mid-month, then what I'd be doing is I'd be looking for possibly the market to make a reversal today. Ignore price, okay? I'm not doing price, I'm just doing time, and then possibly hit a top on Monday, okay, on the 7th, and then reverse lower from there, and then we might reverse into that mid-month time period where we then get this scenario playing out, okay? Now, I'm a little bit confused right now on market direction. I don't really have any sentiment, okay? I'm neither bullish or bearish for the first week to a week and a half on this market, okay? So I'm biased to either way. I don't really care if it goes higher or lower. What I'm trying to find is where this low is going to come in, because I'm watching a mid-month low, like I've said numerous times now, and I want to know if that's likely to come in and what the scenario of it playing out is likely to do. Because if we get some sort of top in the middle of the month, that would be more bearish than bullish, because that means that this cycle for at least the time period of April is likely to invert. So that's just my thoughts. That's just a quick update on what's happening in the markets and my current view. The turn dates work. What we have a problem with now is actually analyzing Trump's market behavior. Okay, so what I mean by Trump's market behavior is Trump's actions and the market's behavior to Trump's actions as we move into this low, this potential low, okay? So the last major low that we had was around this time period, and this saw several days moving higher. But now we've broken that, okay? So as you can see, we've actually broken that low right here, okay? We're still in the bearish territory, but now we're looking for a cyclical low. So what we had here was a seasonality low, okay? Around March, we had a seasonality low. Now we're looking for a cyclical low. And I'd be watching this time period here, and we need to, all I can do is wait. I don't normally put out a video this quick because I don't want to be moving in and out of these videos, just to provide you some sort of, quick update. I'm providing you this update today because we are pushing lower into a turn date. I'm trying to give you some sort of suggestions on what I'd be looking for. And we actually have a turn date on the 3rd, just to reiterate, and a turn date on the 7th. So they're very close together. So that's a little bit of confusion for me right now. However, up higher today would be ideal. Topping out on Monday, then moving down. Else we move down for possibly 2 more days and then push higher, okay? So that's all I have. I'm going to cut this off, and I hope you've gotten at least one thing out of this video.